morning. So let's talk about property taxes and talk about some of the funds that we use when we look at the accounting for property taxes. And I think everyone's pretty familiar with what property taxes are. So we're going to look at the general fund and we're going to look at governmental activities. Now, in this chapter, you get introduced to journal entries and more introduction to journal entries. And there's lots of really good examples in this chapter. You're going to want to look back at the chapter while you're doing your homework and make sure that you understand everything that's going on with these different journal entries, because they're similar to financial accounting, but yet they're different. And so sometimes you think you've got all the journal entries made and then you have one other one to make. So in this first one, I'm going to look at a levy of property taxes. And we're going to levy $6,600,000. And of that, we're going to estimate that 2% is uncollectible. And that's based on past history. And so when we have this transaction, this business dealing happen, transaction's a better word. When we have this transaction, the journal entry for the general fund, and I'm going to try to do both at the same time so you can see the difference. And so let's see, I think I'll come over here and we'll do the general fund here. And then I'm going to come over here and I'm going to do governmental activities. Okay, so in the general fund, when we have this levy, we're going to have a taxes receivable. I hope my fingers will wake up in a minute. Current. And then we are going to go ahead and record those revenues because it's been assessed. And then we're going to set up our allowance. Just like we do in financial accounting, we have an allowance for uncollectible current taxes. That current is very important because those are assessed every year, so it's important that we keep those separate. So we have our taxes receivable. I'm going to have to move this over. $6,600,000, and then we have a 2% that we predict to be uncollectible, and so the difference between the two would be our revenues that we're going to recognize. Okay, so that's what's happening in the general fund. Then in the governmental funds, we have taxes receivable current. Actually, I'm going to copy this and then I'm going to show you the difference so you don't have to watch me type so much. Okay, so we still have taxes receivable current. We still have an allowance, but under revenues, we're going to call this general revenues, property taxes. Okay, the numbers are the same. Then we collect $5,975,000 of current property taxes. So in other words, this year, not last year. So we have cash, just like you would think, and then we decrease our taxes receivable because they're no longer receivable. We've collected those current for that amount, $5,975,000. And then in the governmental activities, we have the same entry. Okay. Then, next thing that happens is we're going to collect $53,000 of delinquent taxes, and we're going to collect $4,800 of interest and penalties. Now, because these are delinquent, they had been recorded as deferred inflows. Remember that? We talked about that and we said we'd be seeing that later, of resources in the prior year. Okay, so those had been, just keep in mind, in the prior year, those have been recorded as deferred inflows of resources, just what it says it is. And so our journal entries, we have cash coming in, that's no different, $57,800, the two added together. Then we have taxes receivable, delinquent, because that's where they are. We're going to decrease that. And then we have interest and penalties receivable, because we have recorded that as a receivable in the prior year. And then we have to take that out of deferred inflow. That's where we put it, so we're going to take it out. And you'll see this process a little more clearly when you do your practice set. Okay, so the taxes receivable delinquent, $53,000, interest and penalties, $4,800, and then we have that deferred inflow. We're going to move it out of there, and we're going to show it as revenue. Okay, that's what you do in the general fund. And then on the governmental side, again, I'm going to copy it over and then show you the differences. Okay, so we have cash, we have taxes receivable delinquent, we have interest and penalties, receivable and taxes. That's no different. But this is not part of the governmental activities journal entry. So we don't have to worry about that one for governmental activities. Okay. Then we have imposed penalties and interest for $7,500, but we only expect $6,200. So we've imposed the penalties, but we don't expect to get it all. And so that journal entry is going to be on the general fund, interest and penalties receivable on taxes. And then we have the allowance. I'm not going to type that whole thing out just so you don't have to listen to me type. And then we have revenues that we're going to recognize. So the interest that we assessed is $7,500. We do not expect to collect $1,300 of that, so we're going to recognize revenues of $6,200. Now on our governmental activities, we're going to have basically the same thing, except this revenue is going to be called general revenues, interest and penalties on delinquent taxes. Okay, and then finally, last thing, we're going to reclassify uncollected taxes and interest and penalty as delinquent. So in order to reclassify those, we're going to come over here and we're going to say taxes receivable delinquent. We're going to have that allowance uncollectible current. That's important that you get those currents in there. And then taxes receivable current. So what we're doing is we're taking them out of current, we're putting them into delinquent, and then we have that allowance account as well. Allowance for uncollectible delinquent taxes. Okay, so see what we've done on our delinquent $625, and then we are going to put that, take it out of current, put it into delinquent. That's what we did here. And then we're going to take that 132 and we're going to take it out of the allowance for current and we're going to put it into the allowance for delinquent. This is the 132 up here. And the way we got that 625, we had 6,600 in taxes receivable current right here, and then we took it out, we collected 5975. So that's that 625. We're taking that out of current here and putting it into delinquent. And so the other thing that we have to do in the general fund is we have to show revenues. And then we have that deferred, remember that neat little account, deferred inflows of resources, unavailable revenues, okay, and this number, let me get my calculator pulled up. This is going to be the 490, the number that we're calculating is going to be our 625 minus our uncollectible plus our 6,200 right here that we expect to collect. So 499,200. We're putting that in an account called deferred inflows of resources, unavailable revenue, and we're taking it out of revenue because see, it was put into revenue here. It was put into revenue here. And so we're taking out the part that we think we're going to collect. And that's what's happening again on the general fund side. On the governmental activities, we have this journal entry. And I believe that one is exactly the same. And then we do not have this entry down here for the deferred inflow of resources. That happens on the general fund side. Okay, so again, go back in the book and look at those other examples and start beginning to understand why we're doing it and how we're doing it. And as I said, when we do the practice set, it'll start making more sense to you. And then the last thing we're going to do is do a schedule of property tax revenue. And so we're going to start with the general fund. And we have tax levy, which is $6,468,000. And that number is right here, these revenues. And then we have delinquent collections. It's a little broader. There we go. Oh, it did not like that. And we're going to add those delinquent collections of $57,800. And then we have unavailable revenues. And that is $499,200. And so our schedule shows current year revenue is going to be our tax levy plus our delinquent collections minus our unavailable revenues. Now, does that make a little bit more sense to you? Hopefully it does. And then on the government-wide revenues, we're going to show a tax levy, $6,468,000, and that's it, current year revenue. And so again, you see the big difference between the general fund and the government-wide statements. All right, so if you have any questions, let me know. That's how we deal with property taxes, and I'll be doing another video in a few minutes over kind of more big picture transactions of how this whole process works.